Are you a taxpayer or business whose working capital is getting blocked due to excess tax deductions or collections, even when your actual tax liability is comparatively much lower? If yes, then Section 395 of the Income Tax Act 2025 and Section 197 of the erstwhile Income Tax Act 1961 becomes relevant for you. I am Bhavnish Mittal from tax team of Dewan and Chopra, and today I will discuss a powerful provision under the Income Tax Act that can help you improve your cash flow and avoid unnecessary blockage of funds. Section 395 provides a mechanism whereby an eligible taxpayer can apply for a low deduction certificate or a nil deduction certificate, and once the certificate is granted, this certificate allows tax to be deducted or collected at a lower rate, and in some cases not at all. However, the same is based on your estimated tax liability. The Rule 213 of the income tax rules require the taxpayer to file an application electronically in Form 128, erstwhile Form 13, to apply for the certificate along with certain supporting documents, which are basically computation of estimated income for the financial year, tax return filed for the past 3 years, projected financial statements and profitability for the financial year, details of advance tax and self-assessment tax paid, details of carry forward losses, unabsorbed depreciation, any exemption or deduction that are being claimed, past year tax assessment records, and details of tax deducted or collected as on the date of filing of this application. The certificate shall be issued post verification of this document and subject to satisfaction of the prescribed authority that your actual tax liability is significantly lower than the tax to be deducted from your income or collected from you. Filing of the application in Form 128 and obtaining the certificate will provide the following key benefits to the taxpayer. Firstly, the enhanced cash flow and liquidity. Another thing is reduced blocking of funds as tax refund with the tax department, lower compliance burden, and more specifically, efficient tax deduction and collection. So to wrap up, it can be concluded that Section 395 is one of the most practical provisions in the Income Tax Act and works more of a cash flow management tool rather than just as a tax saving tool. So if your actual tax liability is lower than the standard TDS or TCS rate, consider applying for the lower deduction certificate and avoid unnecessary blockage of funds. I hope you found this video very informative. Follow us for more practical insights. Thanks for watching.